Hello guys, and welcome back to another company insight. Today we're going to take a look at Oracle. As always, here's a quick overview of the company. The current headquarters is located in Austin, Texas. The share price at the closing on the 11th of November 2023 was $113.09 which corresponds to a market capitalization of around $307.3 billion. Oracle operates in the technology industry, more specifically in the software sector, and the current dividend yield is 1.43%, which is average by historical standards. So far from the brief overview. Now let's continue with the history of the company. On the 16th of June 1977, Software Development Laboratories (SDL) was founded by Lawrence, better known as Larry Ellison, Bob Miner, and Edward Otts in Santa Clara, who met at an Apex company event. The startup capital at the time was $2,000, which they used to found SDL. SDL produced the first version of the database system, which was called Oracle, and which they developed for the CIA until 1979. After ending the business relationship with the CIA, the company initially renamed itself Relational Software Inc. (RSI) in 1979 and moved to Menlo, California. They also sold another Oracle database to Wright-Patterson Air Force Base in 1979, which was another milestone in the company's history. In 1983, the company finally renamed Oracle and went public in 1986. That's it from the history so far. Now let's move on to the CEOs and who runs this company. As you can see, Oracle has only had 2 CEOs in its past, which is why, unlike in the other videos, we will take a closer look at both of them. The first is co-founder Larry Ellison, and the second is former investment banker Safra Catz. Let's start with Larry Ellison. Larry Ellison was born in 1944 in Bronx, New York City, but grew up with relatives in Chicago. He began to studying mathematics at the University of Illinois at Champaign in 1962, but dropped out in 1966 due to a stroke of faith. He then worked a few jobs in the field of computer science and acquired his knowledge by reading specialist literature. In 1977, he finally co-founded Oracle and remained CEO until 2014. He currently holds the position of CTO and executive chairman. Let's now take a closer look at Safra Catz's career. Safra Catz was born in 1961 in Cologne, Israel, and moved to the USA with their parents at the age of 6. There she attended top-tier universities, earning her bachelor from the Wharton School, University of Pennsylvania, and her JD from Harvard Law School. From 1986, she worked for various investment banks, where she became a director of the investment bank Lufkin & Jenrette in 1997. In 1999, she joined Oracle as senior vice president and continued to rise through the ranks until she became CFO in 2011 and finally CEO in 2014. She is also a member of the Disney Board of Directors since 2018. Very impressive in my opinion, but enough about the CEOs. Let's now take a look at the business model. The business model. Oracle Corporation is a well-known US software and hardware manufacturer. However, you might not have heard of Oracle, but this is probably because the company offers products and services for IT environments and specializes in the development and marketing of computer hardware and software for business clients. As you can see from the P chart, Oracle's revenue streams can be broken down into cloud and license, hardware and services, with a focus on the Oracle database system called RDBMS. The cloud and license business covers a range of enterprise applications, such as the Java EE application server and infrastructure technologies. The hardware business offers a range of hardware and hardware-related software products, such as Oracle engineered systems, servers, storage, operating systems, and other. And finally, the service business, which offers consulting services and extended customer support. The P chart here shows the segments by turnover for the financial year 2023, but let's now take a brief look at the development of turnover by individual segment. It can be seen here that the sales segments have occasionally deviated slightly from the average over the last 10 years, but with the exception of hardware, there is no clear trend. The hardware sector has lost an average of 7.5% annually over the last 10 years, but this loss has been spread across the other segments. You have probably also noticed that sales have moved sidewards rather than upwards, but more on this in the overall revenue picture. As can be seen from the bar chart of revenue and profit growth, the trend has been mainly sidewards rather than upwards, And you can also see that Oracle's growth was solid until 2011, after which it flattened out or even turned negative. This decline is due to a fall in demand for enterprise software and database systems, as many companies already have established systems and are not particularly interested in switching. Furthermore, cloud competition from AWS, Azure or Google Cloud has increased significantly, but more on this in my other video about Microsoft, which is linked above. Another point is also new NoSQL databases, big data and AI, in which Oracle was not very well positioned. However, Oracle was able to report record revenue in the 2023 financial year with a strong growth of 17.7%, which, as you just have seen in the revenue streams, is due to a strong growth in the cloud. This is one of the reasons why the estimates for Oracle are so positive, which you can see in the bar chart. Oracle has had an average revenue growth of 2.86% over the past 20 years, as well as an EBIT margin of 34.5% and a profit margin of 24.2%. And profit growth during this period has amounted to 14.9%. However, it's important to point out that these are just estimates and are not necessarily accurate, meaning the actual figures could be either higher or lower. But let's now take a look at what such figures have done to the share price. Here it's very surprising that Oracle, despite no great revenue growth in the past 20 years, has still risen consistently, and $100 invested at the IPO in 1986 would have become $188,633 today, which would correspond to a return of 188,633%. The rapid race around the turn of the millennium, which was followed by the dot-com crisis, is also interesting. And if you had bought at the peak, you would have returned to positive numbers after about 15 years. It's also important to note that the share price has been reduced through various stock splits in order to offer more investors the opportunity to invest. Now the question probably arises as to who is invested in Oracle at all and to what extent. What is unusual here, which is immediately recognizable, is the large stake Larry Ellison holds in his company, as the founders usually do not have many shares in companies of this size due to various capital hikes or sales. However, Larry Ellison still holds over 40% of his company, which according to Forbes makes him the fourth richest person in the world with a fortune of $142 billion. Furthermore, around 42% of the shares are held by institutional investors such as Vanguard and BlackRock, and around 16% by private investors. Now we come to the competitors. As already mentioned, Amazon with AWS, Microsoft with Azure, and Google with Google Cloud are Oracle's competitors. However, there are many others such as SAP with its ERP operating system and Salesforce with its popular customer relationship management CRM tool. Now that you have gained an insight into Oracle's competitors, you are probably wondering when we will get finally to the heart of the matter, the key figures. We are only going to take a quick look at Oracle's 10 biggest acquisitions, and then we go straight to the key figures. As you can see, Oracle has spent a lot of money on acquisitions in the past, including some well-known companies such as PeopleSoft, NetSuite, and Oracle's largest known acquisition today, Senna, for $28.3 billion. Now we finally come to the key figures. The key figures have been divided into 4 different areas, and we will start with the financial stability area. As you can see, Oracle's figures look very wild, but let's go into a little more detail. The equity ratio indicates how large a company's equity is in relation to its total assets. The debt ratio logically represents the proportion of a company's borrowed capital in relation to its total capital. You can say the higher the equity ratio, the better, as it is less likely that the company will become insolvent. However, these values vary greatly depending on the industry. Oracle's equity ratio has fallen constantly and significantly since 2019, which is due to the fact that Oracle has significantly increased its debt capital. The debt-to-equity ratio illustrates this extremely clearly. The debt-to-equity ratio indicates the ratio between debt and equity, and this value should not exceed 200%, as this would make a company too dependent on creditors and could lead to payment difficulties. As you can see, Oracle has massively exceeded this value in the past 5 years. Perhaps you can also recognize the correlation with the lower equity ratio. However, it has to be said that Oracle had an equity ratio of around 54% until 2014. Only since the change of CEO has the equity ratio been constantly and aggressively lowered, which could represent a possible growth strategy of Safra Catz. The net debt to EBITDA ratio is another key figure relating to financial stability, which shows how secure the repayment of financial liabilities is. Values below 1 are considered to be very good, values around 2 are good, and values above 3 are critical. ORCL has also had values far outside the norm here in the last 2 years, as net financial liabilities have risen sharply compared to EBITDA. However, it should be noted that these figures can fluctuate significantly and could look much better next year. But now let's move on to the liquidity ratios. The liquidity ratios indicate how well a company can meet its payment obligation on time. A cash ratio of 100% would mean the company could immediately settle its short-term liabilities with cash. This may sound nice in theory, but in reality it is a disadvantage as the company can't operate well. The aim is therefore to achieve a value of around 15 to 20%. ORCL has also been massively above the norm here for the last 5 years, which in this case is better than financial stability. But in my opinion, this is an unnecessary amount of cash. Although ORCL has made several acquisitions during this time for which it could have been an advantage. In addition to cash and securities, the quick ratio also includes current receivables. This value should be around to 100 to 120% in order to ensure that all current liabilities are covered. ORCL has been well above the recommendation here in recent years, with the exception of 2022, where they were within the norm, and 2023, where they were below the norm. But this is not a bad thing. Now we come to the current ratio, which includes all current assets values and should be between 120 to 200%. As you can see, it's the same as the quick ratio, and this is also not a case of concern. However, it must be emphasized that although these ratios are important for payment fulfillment, they should not be given too much importance as they change daily. Furthermore, a shortfall does not mean insolvency, as these current liabilities are most likely not all due on the same day. Now we come to the profitability ratios and thus to seemingly better news, as these are good to very good. However, it must be mentioned that the return on equity is related to the very low and volatile equity as already mentioned, and therefore you should pay more attention to the return on asset. As I mentioned at the beginning, ORCL currently has an average to slightly below average dividend yield historically, but this is related to the rising share price as the dividend yields change daily. So let us now turn to the last key figures, the valuation ratios. Like the dividend yield, the valuation ratios reflect the current or previous day's valuation of a company and are therefore consistently changing. Here, the share price is set in relation to the earnings, book value or turnover per share, and the book value represents the equity. In principle, the lower the valuation, the better, but if the valuation is too low, you should take a closer look at the company, as this can also be an indication of problems. As you can see, ORCL is currently valued significantly higher than usual, which is partly due to the strong growth in 2023 and the positive outlook. Last but not least, let us now turn to ORCL's future goals. ORCL has set ambitious goals for the future that focus on sustainability and environmental responsibility, which are commitment to renewable energy, clean cloud operations, recycling of hardware, waste reduction, and responsible purchasing. ORCL's commitment to renewable energy and clean cloud operations means that by 2025 its global operations, including cloud and services, will be 100% powered by renewable energy. With regard to hardware recycling, ORCL already recycled 99.6% of its decommissioned hardware in the 2020 financial year. However, ORCL not only wants to achieve these targets itself, but also to encourage others to do so, and therefore offers its customers technology solutions to help them reduce their carbon footprint. The same applies to the main suppliers, who are supposed to have an environmental program in place by 2025. Sounds good to me. What do you think? So that's it from today's ORCL Insight. If you want to see some beautiful numbers, then you should check out the Microsoft video. If you liked it, you are welcome to subscribe to the channel and activate the stock market bell to be informed as soon as possible about future company insights. And as already mentioned, this does not continue investment advice, but only serves to educate yourself, learn from your successes and failures.